I would say it wouldn't necessarily be 100% actually would be into Bitcoin, but it would be, it would definitely be greater than 50% and probably skew toward 65%. I mean, this is obviously just off the top of my head thinking ballpark figures. So it's a big number, obviously, from 1 trillion to 2 or 3 or 400 trillion.
Bitcoin, the world's largest cryptocurrency, has been in the news recently due to its price volatility and the recent launch of several Bitcoin exchange-traded funds, ETFs. It has evolved from simply being considered a payment system to a choice by owners to hold Bitcoin for its store of value properties and attractiveness as a financial asset. Cryptocurrencies are not for everyone, and predicting the price of Bitcoin can be very difficult, given its short history and high volatility. Although it has posted an unusually high average annual return of 49% over the past 10 years, analysts say this performance is unlikely to be repeated in the next decade. In this video, we will share Max Keiser's view on Bitcoin, as he believes that Bitcoin can give 100 to 200x ROI from the current price. But before we move forward, make sure to subscribe to our channel and hit the bell icon so you don't miss any updates. The fiat versus cryptocurrency debate has become a hotbed of situations where the cryptocurrency market continues to trend upward. This has everyone thinking that cryptocurrencies might financially overtake fiat currency as a commonly accepted store of value. However, the falling cryptocurrency prices are restoring the balance in fiat versus cryptocurrency comparisons. The fiat world is losing confidence. Now, if you look at Bitcoin versus gold, gold has been around for a long time. Its total market cap is around $13 to $14 trillion. Bitcoin's maybe $1 to $1.2 trillion. Bitcoin will at least match gold's market cap in dollar terms. So now it takes 13 to 14 times to reach gold, which is much higher than the current price. And then, of course, it should overtake gold. It should also demonetize not only gold, but also the bond market and the real estate market, and demonetize the stock market. So now you're talking about Bitcoin being worth 100 trillion, 200 trillion, 300 trillion. All of this is very likely in the future. So don't look at the price. The price is the least interesting data point about Bitcoin. It tells you virtually nothing compared to the hash rate, difficulty adjustment, or any other underlying metric of the protocol that is far more telling and informative about what's going on than the price. The price is just an indicator of how quickly the world of fiat money is disintegrating. The amount of these assets is estimated to be between $300 to $900 billion. That's equivalent to adding up all the investable assets on planet Earth, and you get a very significant number. All of this is going to be demonetized in relation to Bitcoin. Bitcoin then becomes the unit of account on planet Earth, as well as the median of exchange and a store of value. So let's say there's a Bitcoin bank, which is what we're looking for here in El Salvador. Then, obviously, you borrow against your Bitcoins. Then you create a layer of debt to invest in, and you invest in real estate, in businesses, and in physical assets. It wouldn't be necessarily in 100% real in Bitcoin, but it would be. Now, thinking a little bit about how the economy would actually work, it would definitely be higher than 50% and probably 65%. So it's a big number, from 1 trillion to 2, 3, or 400 trillion. How much gold is actually used to store wealth? And that number is actually closer to 95%, because people say that gold has a utility. This is problematic for two reasons. First, if it has a utility value that, for example, is used in electronics, it represents less than 5% of the total gold on the surface. And substitutes for gold appear in this area, and they are invented all the time anyway, so in reality, the value of gold does not increase. It decreases. That's why people say that gold has a use as jewelry. Jewelry is a store of value. Jewelry is not a utility any more than it is a store of value. People buy gold and own gold and gold necklaces and rings because it is a store of value. This is not because sometimes gold can be bought and sold above the underlying weight of gold on the open market, but it's still a value proposition that you're making. This is the store of value you have. That's all for today. Tell us what you think in the comment section below, and don't forget to like this video before you go. Thanks for watching.